This voice is taken from an article with the title, How Does Inflation Data Affect the Forex Market, as per the Economic Calendar, which has been published on TRADERTALKSNET. Inflation data is one of the most important economic indicators when it comes to Forex trading. This data is closely monitored by both investors and central banks, and it can have a large impact on the currency market. Inflation data is a measure of the change in prices for goods and services over a period of time. It measures the rate at which the prices of goods and services increase, usually over the course of a year. A higher rate of inflation indicates a higher cost of living, and can lead to a decrease in the value of currency. This is because, when prices rise, people need more currency to buy the same amount of goods or services. Central banks use inflation data to set monetary policy, which will ultimately influence the direction of the currency market. If central banks believe that inflation is too high, they will raise interest rates in order to slow down the economy. This will make it more expensive to borrow money, which in turn will lead to a decrease in spending and investment, and therefore, a decrease in the currency's value. On the other hand, if inflation is too low, central banks may lower interest rates in order to stimulate the economy. This will make it cheaper to borrow money, which will lead to an increase in spending and investment, and therefore an increase in the currency's value. Inflation data is also used by investors to assess the health of the economy. For example, if inflation is rising, it may indicate that the economy is doing well and that the currency is likely to increase in value. On the other hand, if inflation is falling, it may indicate that the economy is struggling and that the currency is likely to decrease in value. In addition, inflation data can also be used to identify trends in the currency market. For example, if inflation is consistently rising, it may be a sign of a strong economy and a strong currency. On the other hand, if inflation is falling, it may be a sign of a weak economy and a weak currency. The economic calendar is an important tool for investors when it comes to tracking inflation data. The calendar will provide information on when certain economic indicators, such as inflation data, are released. This allows investors to plan their trades accordingly and to take advantage of any potential opportunities. In conclusion, inflation data is an important economic indicator that can have a large impact on the currency market. By monitoring the economic calendar and tracking inflation data, investors can make informed decisions and take advantage of potential opportunities in the Forex market.